Well, hello, Las Vegas. It's Monique Buchanan, the host of the Welcome Home with Monique show yet again. I've got a great show for you guys. I just want to get you guys up to date on what is going on here in the Las Vegas market. And if you're just tuning in for the first time, I'm Monique Buchanan, your host, also your local Las Vegas realtor here in the Las Vegas Valley. I cover all areas, and I have the number one lender on my team, Mr. Anthony Valentino, on with us today. So, Anthony, can you jump on and give my listeners an update on this market, please?
Absolutely. Thank you for having me, Monique. It's always a pleasure chat with you on all things real estate, especially in this ever-changing market. So, as you talked about, what we saw yesterday is not what we're going to see today and not what we're going to see tomorrow. I mean, this market is changing right before our eyes, just like we've been talking about the last 6 months about how the next 30, 60, 90 days are going to be the most important time to buy if you want to buy within the next 5 years. And that's just because we have leverage right now with these rates. They were at an all-time high. Therefore, the sellers were motivated. Whereas now, the Feds, they raised the rates, almost a dozen times in 2023. Whereas now, the Feds are forecasted to drop the rates 4 times in 2024 and drop the rates 4 to 6 times in 2025. So just like we saw the rates historically go up over the past year, they're now going to historically go down. And what that's going to do to the supply and demand is completely tilt it. Whereas right now we're getting closing costs, we're getting the house we want. Whereas in the next 30, 60, 90 days, once people start seeing these rates are only going down, now there's going to be 10 people going for the same house. And what do you think that's going to do to the supply and demand?
Well, Anthony, what's crazy is after the first of the year, the news, it was all over the news, announcing that the Feds had already started to slowly drop the rates. And I have an influx of buyers ringing my phone now to go ahead and buy, and not to mention with all my listings that are under 400,000, I've got 10 offers on one of my listings right now. That has not happened in the last 6 months. But I'll tell you what, I've got a couple listings that have multiple offers on them even right now, Anthony. So it's already starting.
Yeah, no, it's starting right now. And like I've been telling my clients, if right now is the best time to buy, and, just talk to your, local real estate professional or lender, talk to me, and just see your options. Because right now, if you're sitting on equity, you can be leveraging that. You can be using that to your advantage to buy now and then, refinance once these rates get to that, sweet spot in the next 12 to 18 months. But you're able to make a lot better economical decision now than if you were to wait till, everyone shows up to the party, so to speak.
Absolutely. So I've shared with my listeners that I'm even looking for another property for myself. And, I've got a couple things I need to tackle. And I'm even nervous myself that I'm not able to pull the trigger right now. Like I want to pull it right now. Because I'll tell you what, I just recently had one of our clients, this, Anthony, we just negotiated $100,000 off of her $1.35 million home. So it was listed at 1.35, and I was able to get the property for her in escrow. Congratulations to her, for 1.25. Now, had she waited, I know this, Anthony, had she even waited a couple months, there's no way I would have gotten that much of, been able to negotiate that much from the seller for my client. So the market is changing ever fast. And I was looking at a property over at Toll Brothers just the other day for myself. And the young lady that works for Toll Brothers told me, Monique, I'd love to hold this home for you. She said, but I can't hold her. I said, I just need about a month, maybe 2. She said, by that time, this property will go up $100,000. She said, I guarantee you. I said, well, I don't want to buy it if it's going to be $100,000. That's why I'm like, even for myself. So we're not just talking this. I'm actually out there myself leveraging my equity in my home to purchase a second property. So you're absolutely right. Now, what are some ways that they can leverage their equity. Can you share that with them, Anthony, in case they want to reinvest in this market? They want to, if they want to give us a call and we can go out and get them an investment property, or maybe get one of their kids a property so that they don't miss the boat. How can they go about doing that?
Yeah, absolutely. And just to touch on what you said, that that I see you do, you have what I call beast mode agents, which are agents like you, and then you have agents that just push buttons. And so, with a beast mode agent like yourself, we had a client, and this client was in stagnation because they were not finding the house they want in the price range. And they also didn't like the rates because, the rates being in the upper sixes, and then they were dropping to the mid sixes, but they were still a high payment. And that's when you came in and said, you know what, let's bump up this purchase price. Let's ask for $100,000 reduction. Let's ask for $30,000 in closing costs. Let's drop that rate to 4.5 the first year, 5.5 the second year, and then year 3 through 30 goes to 6.5. And now she was able to get a house she wanted that was out of her reach, but now was in her reach. Now she's getting that rate in the fours like it's going to be in the next 2 years. And so she can date the rate and buy the house. I know that's the crazy, slogan that everyone hears, but it's true, and this is exactly what we did. And we took a client who was in stagnation, and now she's in escrow. Mm-hmm. And, for our clients who are, have houses already and they're sitting on equity and they don't know what to do with it. That's where, talking with a professional real estate agent like yourself, talking with someone like myself, we show the math, because math never lies. And we could show that we can create another nest egg, and we can have that money start working for them, and they can take that money out in the form of a home equity line of credit or a cash out refi. Or we can even do a bridge loan to where they don't even have to sell that property before buying another. And then they could get a bridge loan, which basically bridges the amount of proceeds that they would get from that future sale. And that way they don't have to sell it right away. And then they purchase another house, and then they sell their old house if they want to sell and not rent it out. And then they pay that bridge loan off. And now they are able to purchase before they even sell their current house. So there's a lot of options out there.
Anthony, that's such an amazing, and I understand it only because I've been in real estate. Can you explain or give an example of the bridge loan? Mr. Smith has a house, something along those lines, to just break it down for somebody to really grasp.
Yeah, so there's basically, there's two aspects to a bridge loan. One, people don't want to have their debt to income ratio hit on having two houses and two house payments at their debt to income ratio. And then the other thing is they have all that equity that's tapped in that they want to use, but they have to sell it before they buy the house. And so a bridge loan takes care of both of that. A bridge loan allows you to purchase a house and then to carry a second of whatever future proceeds you're getting on the sale of your house to bridge that gap. So that way you can use those proceeds of the equity of the house that hasn't been sold yet to purchase the new property without having to worry about selling the house before. And so it gives the homeowner or the purchaser peace of mind knowing that they can purchase the new house. They have the money that they can put down from the equity that's tapped into that house, and it's not going to affect them on paper. And now they have 12, 24, 36 months to sell that house and then to pay that bridge loan back. But now there's no obstacles in front of them that's stopping them from buying the dream house they want or a smaller house that they need to downsize or whatever situation they're in.
So it's basically just giving them the money that they would have been waiting on to sell that property, to put down on the new property. Right. It's just giving them that money up front and letting them, take their time about selling the house. Okay, that's
not only that, but it also helps you. Mm-hmm. Yeah, it helps you as a realtor because, if you put in an offer on a house and it's subject to them selling their own house, that offer is going to look kind of ugly. Whereas if you send them a clean offer, now you've pushed them up to the front of the line, and now their offer is going to look the best because there's no contingency.
Yeah, so you're not telling the new person you're trying to buy your house from, hey, I can only buy your this new house from you if I sell my other house, because that makes the seller very hesitant to accept your offer. But now you're able to say, listen, you don't have to wait on me to sell my other house. I'm in a position that Anthony Valentino has put me in a bridge loan, and I'm able to move forward now, and then I'll take my time about selling that other house. So that is an amazing thing, especially with, the competition that is coming. And I'm glad that you touched on that, Anthony. Like I tell a lot of people, they said, Monique, I see all these people buying from you. And Anthony, why is that? I thought it was a bad time to buy. I said, you know what? Maybe it's a bad time to buy with other people, other lenders and other agents. But it's been a great time to buy for my clients because we have been getting them the future low rate today. And that is what you've been doing. You've been getting my clients. And when I tell other agents this, I say, listen, all my people that I've sold a home to the last year, we have been able to get them in 4% rates, 5% rates. And they're looking at me like, how in the world? You have to have an amazing lender that knows all the products and has accessibility to all the products, and as a broker. So if you don't have the lending put in place correctly, then you're right. Then it probably isn't a good time for you to buy. So luckily we have Anthony Valentino on the line today, and he'll happily walk you through every single aspect of the loan and give you all the options. And that's what you need, right? You want to be able to make an educated decision for yourself. There's no pressure here. There's no pressure. It's a 5-minute conversation, and it's all about educating. Me and Anthony are a great team because we both care about people, and we both want people to be educated, whether they use us or not. We hope and pray you would use us after educating you, but at the end of the day, it's about enriching your lives and letting you make the best decision for your families. And that's honestly what truly matters. Right, Anthony?
It is. And the biggest thing I look at is this. If we take care of our cars and we send them to the tune-up shop to make sure that they're running at its finest, you owe it to yourself to do a property mortgage assessment tune-up. If you own property or you own assets, let's pop the hood and let's see how it's operating. Let's see how it's working. Let's see, I'm a big believer in, when I used to be a stock trader for Warren Buffett, he encompassed the process improvement, continuous process improvement. And so I look at that with those types of lenses on everything in my life. And I encourage our listeners to have that continuous process improvement mindset of, where you're at now, how can I continuously improve it? And real estate and mortgages and, all of that can be improved. It's just a matter of popping the hood.
Absolutely. Absolutely. And so just in case you're just joining us, this is Monique Buchanan. I am the host of the Welcome Home with Monique show. I'm also a local Las Vegas realtor here in the Las Vegas Valley, and I've got my team lender on, Mr. Anthony Valentino. And so we are just going over some different options for you not to miss this boat. I always say this, Anthony, Las Vegas is turning into little LA. The prices are shooting up. They've already shot up. I don't foresee them coming down at all. Why would they? We have got Hollywood coming to Las Vegas. Oakland A's just announced that they're coming here. So I don't know what makes people think that we'll ever go back to the $200,000 homes again. You guys, it's just not going to happen. But we're going over some ways that you can access the equity within your home right now. If you don't want to miss the boat, maybe you want to reinvest, maybe you want to help out a family member by getting a home, we're here to guide you and help you with that. My number is 702-984-3700. My number again is 702-984-3700. I will get you with Anthony, him and his team, 5-minute conversation, and he'll give you your options. Okay, like I say, no pressure. Another thing, Anthony uses a soft pull method, which means you will not lose points from your credit when he pulls your credit. Is that right, Anthony?
That's right. Yeah. So, and most lenders have come up with that, that they understand that this is the biggest investment of everyone's lives. And so, myself and a lot of professionals in my industry, we do a soft pull. Now, the ones who do a hard pull, they try to get you in and get you stuck with them. Whereas, at least myself and my loan officers under myself, we do soft pulls and we do not do a hard pull until you're in contract. So that way, you're not obligated on anything and you know exactly what your payment is, what your out-of-pocket is. There's no question marks left on the table and you're confident going into the home buying process without, being, a hard pull on your credit and being forced to one position.
That is a very good point, because that's a lot of people's concerns. They don't want their credit pulled and then, lose those points. So I like to always point out that you guys do that. You guys are just totally on the up and up. And I really appreciate that about you guys. That's why I work so closely with you. But once again, 702-984-3700. If you have any questions, we're here to help you guys. 702-984-3700. My website is welcomehomewithmonique.com, and you can check out previous shows on YouTube as well, Welcome Home with Monique Show. So we're going to dive back into it, guys. Listen, after the first, my phone has been ringing off the hook with buyers, which I'm happy about. They're reading the writing on the wall. They say, Monique, listen, we need to buy. We want to buy now. And we're going to just go ahead and refinance in a couple months. Now, I guess they finally believed me, because they heard MSNBC talk about the lowering of the rates already. CNN, it's been all over the news. The feds have announced that they pretty much have the economy where they want it. And it's looking good to them, so they're talking about lowering these rates, like you mentioned, right?
That's right. Yep.
So, and then you have some other things. You have the bank statement program as well, for people out there that are entrepreneurs as well. Can you touch on that as well?
Yeah, so you have two different types of loans. You have conforming loans and you have non-conforming loans. Conforming loans mean you conform to the guidelines, and so typically that's the central bank guidelines, whether it's Fannie Mae or Freddie Mac or FHA or USDA or VA, first-time home buyers, seasoned home buyers. Those are conforming, where they want to make sure you have the credit score, you have the taxes, you have the pay stub, you have the employment, all that good stuff. Whereas when it comes to non-conforming, that's where you do not have those you don't have the documentation to show, but that doesn't mean that this is a back alley loan or a hard money loan. It is by far not even that. It's just a different loan for that type of client. So I have a lot of savvy clients who don't like to pay their Uncle Sam, that is. And so they like to utilize being self-employed and being able to have all of those write-offs. And so they write off all the stuff that they're entitled to, but what that does is it lowers their overall income that they can show on paper. And that takes them out of the conforming guidelines, and they have to go with non-conforming. But, a lot of my clients love non-conforming because they only need a bank statement, 12 months of bank statements, and they can get approved, or a P&L only, and they can get approved, or a DSCR, where it's basically, no income, and it's based off of the debt service ratio of that loan, meaning the mortgage payment meets the rental payment, and there's no income at all. So there's so many options out there to be had. It is really, we have to sit down, talk to the client, understand their story, what they're trying to do, and that's where we come in to show them the best option for their situation.
Right. And you guys, if you're just tuning in, I just want to give that number one more time. 702-984-3700. We only have 30 minutes on the show, but there's so much to be said. So many different options out there. Now, the last one I want to touch on again is the HELOC. I love that one because it does not interrupt their current rate. If they want to pull out money and call us and say, hey, Monique, we want to reinvest. We want to buy a couple condos by the Strip. We know the Oakland A's are coming over there by the Tropicana or wherever. So we want to buy a couple condos over there, but we don't want to touch our current rate with our home. And that is what the HELOC. Can you dive into the HELOC so they can understand that as well?
Absolutely. So if you're a homeowner and you own a house, whether it's primary, second home, or investment, and you have, equity that's untapped, you can pull that equity out in two forms. You can either do a cash out refinance, where you refinance the first loan and then you take money out and it changes that rate, and then you change the loan amount. Or for most people who took advantage of the economy and have rates in the 2s and 3s, that is a unicorn rate that we will never see again in our lifetime. So they don't want to touch that. So you have the second option, which is a home equity line of credit, or what is called a HELOC. And that's a second loan that is separate from the first. So that way you don't touch that first loan. And then any money you take out is a second position. And, you can take as much as 95% out. So every 100,000 that you owe, that it's worth, you can take up to 95,000 out of it. There's a lot of options. You can do ones where you could do a draw, where you open it up and then you can take money from it for 5 or 10 years before you can no longer take money, and then you just pay it back. There's fixed, there's variable, there's all different kinds of options. There's no prepay payment penalties. There's early payment that you can do. There's amortizations for 30 years or 15 years. There's a lot of options of what's going to best fit the client situation.
Yes, and just so they understand, it will be if you take $100,000 out, and I'm just throwing numbers out there. Obviously, Anthony's the lender, but let's just pretend that you'll have an extra $800 payment. Does that sound about right? Depending on average.
So, I mean, if we're looking at, say, you say 100,000.
Yes. If they take $100,000, let's say that they have $300,000 in equity, and they decide to take $100,000 loan out as a HELOC, around, just giving them some ideas on what that will look like for them.
Yeah, absolutely. So I have dozens of clients on a daily basis who feel, because I'm licensed in the United States, not just in Nevada. And so I have dozens of applications come in for HELOCs where there's no appraisal, where there is no paperwork, and within 5 days from start to finish, the funds are in. And they come to me, and they're past clients, or they're from, people who they trust who send them to me, and they go, Anthony, I have a $600 a month car payment. I have $600 a month in credit card debt, and I have a $300 a month installment loan, and I'm paying $2,000 a month for all of that. And I say, okay, that's $75,000. Why don't we take $100,000 out, get you $25,000 as well after you pay all your debts off, and a $100,000 loan at 30-year fixed, you're looking at around a $630 payment. So that right there alone is going to save them thousands of dollars on top of getting money out, consolidating all of their debt, not paying those high credit card, double-digit interest payments, making the flexibility of having a 30-year term, but being able to pay it off whenever. And, and then it gives them options. It gives them that spending flexibility and frees up their overall, income, debt-to-income ratio for their whole portfolio.
That's what I love, Anthony. That's what I love about you. You look at people's entire package. You looked at my clients and said, hey, you've got student debt. You're paying, like you said, that person was paying $2,000 with car notes, maybe student debt. You know what I mean? And you just said, hey, let's do a HELOC. It won't interfere your current rate. You're able to knock out all your debt and still have $25,000. And now your monthly payment is all the way down to just $600 extra. That makes complete sense instead of just sitting on your equity and doing nothing with it.
You send me clients all the time, and they say, well, I'm paying, $1,800 a month in a rent, and I can't afford a $2,500 a month mortgage payment. But then I look and I see that they have a $600 car payment and $400 in credit card bills, and they have $30,000 sitting in their 401k making 3% average yield. And I advise them, you can take that money out as a first-time home buyer for your primary residence, not get early payment hit. You can take that money, and then you can pay off through the loan your car payments and your credit card payments, and now you're dropping your overall by $1,000. So you're usually paying $1,800. I drop $1,000. That's $800. I can bump your mortgage up to $2,700, and it feels like you're still renting, but now you own. And so that's why it's important to have someone look at your entire situation, so I can show you how you can utilize everything that's within your tools to get you into being a homeowner. And these are things that a lot of clients don't see and realize, and that's where I come in to look at their whole portfolio to help them understand that you can be a homeowner. You can have the same payment that you're renting. You just have to be creative and utilize what's in front of you and make you a homeowner.
Yes, and I appreciate that. I appreciate that you take the time to look over my client's entire package, like everything that's going into their lives. Like you just don't, hey, look, here's your score, you're not approved and just go on about your business. I appreciate that you care enough to look at the overall, situation and figure it out for them. So I just want to thank you again, Anthony, for coming on today. I look forward to having you on again. And I want to give our clients a big shout out to the St. Louis family. We closed on them, yesterday. So congratulations. Me and Anthony are happy for you guys, and we look forward to each and every one of you out there, our KUMV family, that's going to share this information with someone that's going to refer us. We appreciate that in advance, and we want to say thank you for listening to the show, and until we hear from you.